Based on the historical data and forecast, Bitcoin shows a generally upward trend with volatility. The RSI fluctuates between 40 and 60, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands have been widening, suggesting increasing volatility. Considering these factors, I recommend a strategy that combines trend following with opportunistic entries based on RSI and Bollinger Bands. I suggest a long position entry at $70,700, coinciding with the first forecast price and a slight pullback from the recent high. A stop loss should be placed at $69,800, just below the support level, to protect against a potential trend reversal. The initial target price is $73,400, aligning with the forecast price and the upper Bollinger Band. To refine the strategy, we will incorporate RSI signals. If the price dips and the RSI falls below 40, consider a second entry at $70,900. Set a stop loss at $69,800 and target $74,600. If the price rises and the RSI exceeds 80, consider taking profits at $73,400. This dynamic approach allows for adapting to short-term fluctuations while capitalizing on the overall upward trend. The portfolio will prioritize the long position strategy, adjusting entries and targets based on RSI and Bollinger Band signals to maximize returns. Based on the historical data and forecast, Ethereum exhibits a clear upward trend, breaking through the resistance level of $2,340. The RSI indicates that the asset is approaching overbought conditions, with a value of $61 on April 7, 2026. However, the forecast suggests continued price increases, reaching $2,390 by April 14, 2026. Therefore, I recommend a long position. We will enter a long position at $2,220, placing a stop-loss order at $2,180 to protect against a potential pullback. The initial target price will be $2,330, aligning with the forecast for April 14, 2026. To refine this strategy, we will incorporate the Bollinger Bands. The price is currently near the upper band, suggesting a potential pullback. If the price touches the upper Bollinger Band at $2,320, we will take partial profits. The remaining position will stay active with a revised target price of $2,390. This combined strategy leverages the upward trend identified by the RSI and forecast while managing risk with the Bollinger Bands and stop-loss order, aiming for high returns while minimizing potential losses. Based on the historical data and forecast, XRP shows a slight upward trend with price fluctuations around the $136 to $141 range. The RSI indicator fluctuates between 38.3 and 51.6, indicating periods of oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering these factors, I recommend a combined strategy incorporating RSI and Bollinger Bands for optimal returns. First, we'll implement a strategy based on RSI. When the RSI falls below 20, it signals an oversold condition, and we should buy. The last RSI was 51.6, so we don't have an oversold condition. When the RSI rises above 80, it signals an overbought condition, and we should sell. Therefore, the most efficient strategy is to buy XRP at $1.37 on April 8, 2026, when the price is near the support level and the RSI is not oversold. Set a stop loss at $1.36 to limit potential losses. The forecast indicates a potential rise to $1.43, so set a target price at $1.43. If the price touches the bottom of the Bollinger Bands, which is around $1.27, it could be a buying opportunity. If the price touches the top of the Bollinger Bands, which is around $1.53, it could be a selling opportunity. This combined strategy leverages both RSI and Bollinger Bands to capitalize on price movements while managing risk effectively. Based on the historical data and forecast, BNB exhibits a potential upward trend. The price has been fluctuating within the range of $583 to $657, with recent consolidation around $600 to $620. The forecast for the next week indicates a gradual increase, starting from $620 and potentially reaching $643. Considering the RSI values consistently below 50, particularly dipping to 33.1, the asset is currently oversold. Therefore, I recommend a long position. Entry price should be $614, with a stop loss set at $606, which is the support price. The initial target price will be $627, aligning with the first forecast price and the upper Bollinger Band. To refine the strategy, we'll incorporate the Bollinger Bands. The price is currently near the lower band, suggesting a potential bounce. If the price reaches $627, a trailing stop loss can be implemented at $620 to secure profits while allowing for further upside. If the price breaks below $606, the trade should be closed immediately to limit losses. The final target price should be $643, aligning with the highest forecast price. This portfolio combines RSI oversold signal, Bollinger Band support, and forecast data for a high-return investment strategy. Based on the historical data and forecast, Solana shows a slight upward trend with volatility. The RSI consistently dips below 50, indicating oversold conditions, particularly on March 28, 2026, at 39.3, and April 1, 2026, at 36.8. The Bollinger Bands are widening, suggesting increased price fluctuations. Considering these factors, I recommend a long position strategy targeting a potential bounce from the support level. We will enter a long position at $83.8, placing a stop-loss order at $83.2, just below the established support level. Our initial target price will be $85.1, aligning with the forecast for April 14, 2026. To further enhance our strategy, we will incorporate a trailing stop-loss based on the Bollinger Bands. If the price approaches the upper band, we will adjust the stop-loss upwards, securing profits while allowing for continued upside potential. Specifically, if the price reaches $85.1, we will move the stop-loss to $83.8. If the price continues to rise and hits $88, the resistance level, we will adjust the stop-loss to $85.8, aiming for a secondary target price of $90. This dynamic approach combines RSI-driven entry with Bollinger Band-guided risk management, maximizing potential returns while minimizing downside exposure. Based on the historical data and forecast, TRON demonstrates a slight upward trend with price fluctuations within a defined range. The RSI consistently fluctuates, but recently has been trending down. The Bollinger Bands show periods of contraction and expansion, indicating periods of low and high volatility. Considering the support price of $0.314 and resistance price of $0.319, I recommend a strategy focusing on short-term gains by capitalizing on these price boundaries. I propose a buy strategy when the RSI falls below 60, indicating an oversold condition. The entry price will be $0.316. A stop-loss order should be placed slightly below the support level at $0.313 to limit potential losses. The target price will be set at the resistance level of $0.319, aiming for a profit of $0.003. To further refine the strategy, I'll incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential buying opportunity, aligning with the RSI oversold condition. If the price closes above the upper band, it suggests a potential sell signal, but given our focus on short-term gains and the forecast indicating a stable price around $0.318, we'll stick to the initial buy strategy. This integrated approach combines momentum and volatility indicators to maximize potential returns while managing risk effectively. Therefore, the final portfolio will be a buy strategy with an entry price of $0.316, a stop-loss price of $0.313, and a target price of $0.319. Based on the historical data and forecast, Dogecoin shows a sideways trend with fluctuating prices. The support price is consistently at $0.0905, while the resistance is at $0.103. The RSI fluctuates between 42.7 and 53.9, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been moving within the bands, suggesting moderate volatility. Considering the forecast, the price is expected to remain around $0.0927 to $0.0949. we will implement a combined strategy using RSI and Bollinger Bands. Our strategy involves a combined approach of RSI and Bollinger Bands. We will enter a long position when the RSI falls below 40 and the price touches the bottom of the Bollinger Bands. Specifically, we will enter a long position at $0.0927. The stop loss will be set just below the support price at $0.0905 to protect against a potential downside breakout. The target price will be set at the resistance price of $0.103, aiming to capture a significant portion of the potential upside. This strategy combines the momentum indicator RSI with the volatility indicator Bollinger Bands to identify high-probability trading opportunities with clear entry, stop loss, and target prices. Based on the historical data and forecast, Cardano shows a declining trend in the past 2 weeks, but the forecast data suggests a potential upward movement in the next week. The RSI consistently remained below 50, indicating a bearish momentum, but recently approached the 54.0 level, signaling a potential shift. Considering the support price of $0.255 and the resistance price of $0.289, we will implement a strategy combining RSI and Bollinger Bands. We will enter a long position when the RSI dips below 20, and the price touches the bottom of the Bollinger Bands, indicating an oversold condition. Therefore, I recommend a long position entry at $0.233. Place a stop-loss order at $0.228 to protect against potential downside risks. The initial target price will be set at $0.258, aligning with the forecast data and the middle Bollinger Band. If the price reaches $0.258, we will move the stop-loss to the entry price of $0.233 to secure profits and manage risk. The final target price will be $0.289, near the resistance level. This strategy aims to capitalize on the anticipated upward movement while mitigating potential losses through strategic stop-loss placements. Based on the historical data and forecast, Bitcoin Cash has been exhibiting a downtrend, with the price fluctuating within a defined range between $431 and $452. The RSI consistently remains below 50, indicating prevailing selling pressure. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential oversold condition. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. We will initiate a long position at $435, placing a stop-loss order at $431 to limit potential losses. The target price will be set at $446, aiming to capitalize on a potential bounce from the support level and a likely short-term upward correction. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI falls below $37, which occurred on April 3, 2026, and the price touches the lower Bollinger Band, we will enter a long position at $431. The stop-loss will be set just below the support level at $429. The target price will be $441, which is the resistance level. This combined approach leverages the oversold signal from the RSI and the price proximity to the lower Bollinger Band to identify optimal entry points, maximizing potential returns while minimizing risk. This portfolio is the most efficient of the three strategies. Based on the historical data and forecast, Chainlink shows a generally upward trend, bouncing between the support of $9.17 and the resistance of $9.9. The RSI fluctuates, dipping below 50 and occasionally nearing oversold territory, but not consistently. The Bollinger Bands indicate periods of volatility, with the price frequently touching both the upper and lower bands. Considering the forecast for April 8, 2026, at $9.3, I recommend a long position. Entry price should be $9.3. Given the support level at $9.17, set a stop-loss at $9.17 to limit potential losses. The resistance level of $9.9 provides a reasonable target price. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI falls below 30, consider a long entry at $9.17, with a stop-loss at $8.9 and a target price of $9.9. Conversely, if the price touches the upper Bollinger Band, consider a short position with an entry price of $9.9, a stop-loss at $9.97, and a target price of $9.3. The most efficient portfolio would be a combination of both strategies, allocating 60% to the long position and 40% to the short position, dynamically adjusting based on market conditions and indicator signals. Based on the historical data and forecast, Render shows a clear upward trend, consistently bouncing off the support price of $1.87. The RSI fluctuates, but generally remains within a healthy range, indicating neither extreme overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price movement. Considering these factors, I recommend a long position strategy. We will enter a long position when the price retraces to the support level of $1.87. The stop loss will be set slightly below the support at $1.77 to account for potential short-term dips. The initial target price will be $2.12, aligning with the forecast for April 14, 2026. To refine this strategy, we will incorporate RSI signals. If the RSI falls below 30, indicating an oversold condition, we will enter a long position at $1.87. The stop loss will remain at $1.77. If the RSI exceeds 70, indicating an overbought condition, we will take profits at $2.12. This combined strategy leverages both trend following and momentum indicators to maximize potential returns while mitigating risk. The portfolio will be 60% long position and 40% cash. Based on the historical data and forecast, Pump.fun has been exhibiting a downtrend with some volatility. The RSI has fluctuated, but recently moved above 50, suggesting a potential shift in momentum. The Bollinger Bands show that the price has been bouncing between the upper and lower bands, indicating continued sideways movement. Considering the support price of $0.00176 and the resistance of $0.0021, a conservative strategy is warranted. I recommend a long position with an entry price of $0.00178. Place a stop-loss order at $0.00174, just below the lower Bollinger Band, to limit potential losses. Set a target price of $0.00198, aiming for a modest profit within the resistance level. This strategy combines technical indicators and price action to capitalize on short-term fluctuations while managing risk. To refine the strategy, I'll incorporate an RSI-based filter. If the RSI falls below 30, indicating an oversold condition, initiate a long position at the next price action. If the RSI exceeds 70, signaling an overbought condition, consider exiting the position or tightening the stop loss. The forecast data suggests a price range between $0.00176 and $0.00186 in the coming week. Therefore, I recommend a long position with an entry price of $0.00176. Set a stop loss at $0.00173 and a target price of $0.00192. This combined strategy leverages both Bollinger Bands and RSI for improved accuracy and risk management, aiming for a balance between potential returns and capital preservation. Based on the historical data and forecast, Morpho demonstrates a fluctuating trend with recent upward momentum. The RSI consistently stays below 80, indicating the asset is not overbought, while occasionally dipping below 30, suggesting periods of oversold conditions. The Bollinger Bands show a narrowing trend, indicating decreasing volatility and a potential breakout. The forecast prices suggest a continued upward trajectory, reaching $1.78. Given this analysis, I propose a long position strategy with an entry price of $1.63. A stop-loss order will be placed at $1.59 to mitigate potential losses if the price declines. The target price for this trade is set at $1.78, aiming to capitalize on the forecasted upward movement. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI dips below 30, it signals an oversold condition, providing a strong entry point. When the price touches the lower band of the Bollinger Bands, it's another signal to enter a long position. Combining these signals, we'll enter a long position at $1.63. The stop loss will be set at $1.59, just below the lower Bollinger Band. The target price will be $1.78, aligning with the forecast and providing a reasonable profit margin. This integrated strategy balances technical indicators with the forecast data for a high probability, high return investment opportunity. Based on the historical data and forecast, Worldcoin demonstrates a downtrend with significant volatility. The RSI consistently remains below 50, often dipping into oversold territory below 30, indicating weakening momentum. The Bollinger Bands show a narrowing range, suggesting decreasing volatility, but the price has consistently touched the lower band, reinforcing the downward trend. The forecast predicts a continuation of this downtrend, with prices expected to fall further to $0.234. Considering these factors, I recommend a short selling strategy. Entry price should be $0.271, with a stop loss set at $0.286 to limit potential losses if the price unexpectedly reverses. The initial target price is $0.237, aligning with the forecast. To refine this strategy, we'll integrate an RSI-based approach. When the RSI falls below 20, oversold, it signals a potential bounce, but in this case, the consistent downtrend suggests a limited upward correction. We'll maintain the short position, but adjust the target price to $0.234 based on the forecast. If the price rebounds to $0.25, we'll consider partially closing the position to secure some profit and reduce risk. The overall portfolio will prioritize the short selling strategy, with adjustments based on the forecast and RSI readings, aiming for a balance between risk mitigation and profit maximization. Based on the historical data and forecast, Ethena shows a downtrend with increased volatility. The RSI consistently remains below 50, indicating a bearish sentiment. The forecast for the next week predicts a continuation of this downtrend, with prices hovering around $0.0847 to $0.0881. Considering the support level at $0.0891 and the Bollinger Bands, I recommend a short selling strategy. We will initiate a short position at $0.0877, placing a stop-loss order at $0.0911 to limit potential losses if the price reverses. The target price for this trade is set at $0.0847, aiming to capitalize on the anticipated downward movement. To maximize efficiency, I propose a portfolio consisting of 60% short selling and 40% holding. The short selling strategy will be the primary focus, leveraging the bearish momentum. The remaining 40% will be held in cash, allowing for flexibility to adjust the position based on evolving market conditions. This balanced approach aims to mitigate risks while capitalizing on the expected decline in Ethena. The predicted price movement is based on the Bollinger Bands and RSI, and the strategy is designed to be adaptive and responsive to changing market dynamics. Based on the historical data and forecast, Dash has shown volatility with a recent upward trend, though it has tested the support level of $32.7. The RSI indicator fluctuates around 40 to 55, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening, suggesting increasing volatility. Considering this, I recommend a moderately bullish strategy. We will enter a long position when the price touches the support level of $32.7. A stop-loss order will be placed just below the support at $31.7 to protect against a potential breakdown. The initial target price will be set at the resistance level of $35.9, aiming for a potential gain of $3.2. To refine this strategy, we'll incorporate the Bollinger Bands and RSI signals. If the price approaches the lower band around $29.2 and the RSI dips below $37.9, indicating an oversold condition, we'll enter a long position at $29.9 with a stop-loss at $28.9 and a target price of $35.9. Conversely, if the price touches the upper band around $35.5 and the RSI exceeds $43.7, we will consider a short position, but given the prevailing upward trend, this is less likely. The most efficient portfolio will prioritize the long position when the price tests the support level or enters an oversold condition, balancing risk and reward for potentially high returns. Based on the historical data and forecast, Dogwifhat shows a slight upward trend with fluctuating volatility. The RSI indicates periods of both oversold and overbought conditions, suggesting potential for short-term price swings. The Bollinger Bands have been widening, reflecting increased volatility. Considering the support price of $0.19 and the forecast prices, I recommend a long position strategy with a focus on capitalizing on short-term upward movements. The entry price should be $0.186, coinciding with a recent dip and a potential bounce. A stop loss should be set at $0.178, just below the recent low and the lower Bollinger Band, to limit potential losses. The target price is $0.197, aligning with the forecast high and the resistance level, offering a reasonable profit margin. To enhance the strategy, I will incorporate an RSI-based filter. If the RSI falls below 30, indicating an oversold condition, enter a long position at $0.186 with a stop loss at $0.178 and a target price of $0.197. Conversely, if the RSI exceeds 70, indicating an overbought condition, consider exiting the position or shorting. This combined approach, blending trend analysis, Bollinger Bands, and RSI signals, aims to maximize returns while managing risk effectively. The overall portfolio will be 60% long and 40% in cash to allow for flexibility and opportunistic re-entry. Based on the historical data and forecast, Pepe has been trading sideways with a support price of $0.0000340 and a resistance price of $4.06. The RSI indicates that the asset is currently approaching the oversold territory, with a value of 59.0 on April 7, 2026. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential for a pullback. Given this information, I recommend a long position with an entry price of $0.0000350. The stop loss should be placed slightly below the support level at $0.0000330 to limit potential losses. The target price should be set at the resistance level of $4.06, aiming to capitalize on a potential breakout. To refine the strategy, we can incorporate the RSI and Bollinger Band signals. If the RSI falls below 30, indicating an oversold condition, consider entering a long position. Conversely, if the RSI reaches 70 or higher, suggesting an overbought condition, a short position might be considered. Additionally, if the price touches the lower Bollinger Band, it could signal a buying opportunity, while touching the upper band might indicate a selling opportunity. Combining these signals, I suggest a portfolio with 60% long positions, 30% short positions, and 10% in cash, dynamically adjusting based on the RSI and Bollinger Bands readings. This diversified approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, LayerZero shows a volatile trend with recent price fluctuations. The RSI consistently hovers around the 40 to 50 range, indicating a neutral to slightly bearish momentum. The Bollinger Bands have been widening, suggesting increased volatility. Considering the support price of $1.96 and the forecast for a slight decrease in price initially, I recommend a short-term contrarian strategy. We will initiate a short position at $2.04. The stop loss will be set at $2.25, just above the upper Bollinger Band, to limit potential losses if the price unexpectedly rises. The initial target price will be $1.88, near the support level, aiming for a quick profit from the anticipated downward movement. To refine the strategy, we'll incorporate RSI signals. If the RSI falls below 30, indicating an oversold condition, we will cover the short position at $1.97. Conversely, if the RSI reaches 70 or above, suggesting an overbought condition, we will close the position at $1.95. This adaptive approach combines the Bollinger Band analysis with RSI confirmation, creating a robust and dynamic trading plan. The overall portfolio will be 60% short position, 20% RSI oversold cover, and 20% RSI overbought close. This balanced approach seeks to maximize returns while managing risk effectively. Based on the historical data and forecast, Zcash shows a strong upward trend. The price surged from $213 to $321 in just 2 weeks, indicating robust buying pressure. The forecast for the next week predicts continued growth, with prices reaching $336. The RSI consistently moved above 50 and recently crossed 71.2, indicating an overbought condition. However, given the overall bullish momentum and the projected price increase, I recommend a long position. The entry price will be $280, aligning with the start of the forecast period. A stop loss will be placed at $270, just below the lower Bollinger Band, to protect against a potential pullback. The initial target price will be $291, corresponding to the forecast price for April 11, 2026. To maximize potential returns, we can implement a trailing stop-loss strategy. Once the price reaches $291, move the stop-loss to $284, the lower Bollinger Band on April 7, 2026. If the price continues to rise, adjust the stop-loss accordingly, always maintaining a buffer below the lower Bollinger Band. The final target price will be $336, the highest forecast price for the week. This strategy combines RSI signals, Bollinger Band analysis, and trend confirmation to capitalize on the upward momentum of Zcash, offering a balance of risk management and potential for high returns.